You're listening to the Fed and Fearless podcast. On today's episode, I'm chatting with Annie Hillman about how bookkeeping done the right way can actually help you grow your business. So stay tuned. Welcome to the Fed and Fearless podcast. I'm your host, Laura Schoenfeld, a registered dietitian, nutrition business coach, and online entrepreneur with over 10 years of experience in online business. And I'm here to show you everything I've learned about creating a life and a business that nourishes you. On this podcast, we'll talk about the lifestyle habits, practical strategies, mindset shifts, and leaps of faith required to build a healthy body, a powerful mind, a strong spirit, and a successful business. Hey there, welcome back to the Fed and Fearless podcast. I'm your host, Laura Schoenfeld, and today's conversation is about something that might not sound so exciting, but is honestly so important to the success of your business, and that is bookkeeping. So my guest today is Annie Hillman. Annie is the founder and head bookkeeper at Atlas Bookkeeping Co. While finishing her college degree, she took a temporary accounting job and instantly fell in love with accounting. She worked her way up to staff accountant and stayed there until starting Atlas in 2020. Now she spends her days helping business owners treat numbers like a tool and not a threat so they can run empowered, profitable businesses with calm confidence. She helps business owners embrace numbers, increase profits, and stress way less with monthly money management. Besides crunching your numbers, she loves fitness, baking bread, and hanging with her husband, daughter, and 2 dogs. So Annie and I are very almost on the same timeline as far as having our daughters. So she's got a 6-month-old and I currently have a 5-month-old. So we definitely are in a very similar phase of life. And I was really glad to have Annie come on and talk about this particular topic because I think sometimes, especially if you're new to business or you're not making a ton of money in your business just yet, that sometimes the bookkeeping thing can fall on the wayside or it can feel overwhelming. And I feel like the conversation today really simplified things and made it really easy for anyone to successfully track their numbers and be able to know the difference between the sales that they're making and the profit that they're actually keeping. So I was super stoked to have Annie on the show with us today. Without further ado, here is Annie Hillman. All right, everyone. Well, I am so excited to have with us on the show today, Annie Hillman. Welcome to the Fed and Fearless podcast, Annie.
Thanks for having me.
So before we hit record, we were just talking a little bit about the focus of today's conversation, and that is bookkeeping, which I know sometimes some people might be like, that doesn't sound like something I want to hear a conversation about. But as business owners, it's something that we definitely need to be talking about. And then also, it's something that I think people don't totally understand the value of knowing these numbers. For y'all's reference, we did have a solo episode talking about how I prepared for maternity leave. And a big part of that was knowing my numbers. So whether you're looking to take time off, like a maternity leave or a vacation or something, or just so you know where your business can be growing, I really feel like knowing your numbers is super important. So I'm really glad that Annie's here to chat with us. So Annie, can you just tell us a little bit about how you got started in your business, in the world of small business as a bookkeeper for other businesses?
Yeah, definitely. So I used to live in Napa, California, and I worked, so most people know that's like huge wine industry area. So I was working at a winery doing accounting there, and I really liked it. I loved numbers. I've always loved numbers. But I knew eventually I'd want to branch out and do something else because we were looking at having kids eventually. And I wanted to not really be chained to a desk for 10 hours a day and be able to actually see my children. So thinking about that, I was like, okay, that's in the future. And then I had a friend of my husband's approached me and was like, do you want to do my bookkeeping just kind of on the side? And so I started doing that and I was like, oh, wait, like I could do this. Like I could, try to find more clients. And so I did. And it grew way faster than I imagined. So I started looking for clients, and then about 9 months into it, I quit my job at the winery and started doing my business full time. And as time's gone on, I've gotten to like figure out who I want to work with and the kind of businesses that are really, I think, most benefit from my services, because I think there's a lot. I will be the first to say there's a ton of amazing bookkeepers out there that I'm connected to. So finding the bookkeeper that works best for you is going to be really important. And so I think that I've been in my business it's been almost 3 years now, which is crazy. I finally feel like I'm at a point where it's like the people that I can best serve and work best with me, we're at that point where we found each other. So it's really cool.
Mm-hmm. So something I see in a lot of my newer business clients, whether that is people that are brand new or maybe just kind of getting started and maybe they're making a few thousand a month, up to 10K a month in their business, I find that a lot of them are doing their own bookkeeping. I would say that I was doing my own bookkeeping, but to be honest, I really did not do a very good job of that the first couple of years I was in business. I was one of those people who literally, and this was before spouse and children, I would literally just wait until like the last 2 weeks of December and then have like 3 days that I just like crammed basically and went through everything, and it was super stressful and definitely not recommended. And I don't think a lot of my clients do that. Luckily, they're smarter than I was, and they're actually keeping up with it on a monthly basis. But I kind of want to talk about the case for hiring a bookkeeper, because I do think that for us, that was a hire that I'm trying to think when we got our bookkeeping team. It's been a couple of years now. And I feel like having that really up-leveled our business a lot, being able to, first of all, outsource that so I'm not spending time doing it. And then second of all, having information to make decisions from as far as money is concerned. So tell us a little bit about why someone who doesn't have like a massive team or, hundreds and hundreds of thousands of dollars of revenue every year, why should they consider having a bookkeeper as part of their team, small team even?
Yeah, that's a really good question. So I'm not going to say you can never DIY it. Like there's a time and a place for it. I think the problem with DIYing is it's so easy to mess up. Unless you're using like a spreadsheet, like you can do it. It's pretty simple, but you're not going to get really the data that you'll get from having a bookkeeper. And it's a twofold thing. Like you said, the big piece of it is like having that time that you get to spend in your business instead. So it might cost you $400 a month to hire a bookkeeper, but that however many hours you are taking, and let's be fair, it takes you about a day a month. You could instead spend that in your business making money. So there's a chance that you could hire that bookkeeper at $400 a month and instead use that time and you could make double that. And so in turn, you might be actually making money. So that's a really big piece of it. But the other piece of it is that data. And you're not only paying someone for that time that you get back, you're paying them also to get that data and someone that's going to help you. For me, my company, we focus big time on education. So it's not just, hey, like it's not total hands off. It's also, you can text me or email me, Voxer me anytime with any questions you have. And I'm there to answer all your financial questions. So yes, there is an advantage to, you're saving a little money by DIYing, but you're kind of like flying blind. You don't really know if what you're doing is right. And that, I think the time is a big piece, but I also think that knowledge is a huge piece of it. Your books are getting done correctly.
I do find that a lot of people make decisions about where to invest or not invest in their business based on whether or not they could do it cheaper without investing, or maybe they can do it for free. And that's always been a big part of our approach to helping people, is showing them that I'm not saying they can't do some stuff for free, but typically the stuff that you're doing that needs to be done or, is kind of integral to the running of your business, maybe shouldn't be something you're not spending any money on. Cause we even talk about software selection, and what tools can be used to help run your business. And so many people are like, oh, I'm just going to I'll use Google Drive or something, and I'll use these different things to kind of duct tape stuff together so I don't have to spend any money. And I'm like, first of all, how much extra time is that taking you? And, is it worth saving $50 a month to, spend all that time? But then I really feel like the experience of the business, both from the customer side and the business owner side, really makes a huge impact on revenue potential. And so, a lot of what we talk about is the customer experience side, where it's like, what's the customer experiencing? What's the client experiencing when they sign up to work with you? Is it this super professional, very clearly organized, like automated, really great platform experience? Or is it like you're sending them links to a Google Drive and things are going missing and they don't know where stuff is and that kind of thing. So I feel like with the bookkeeping, the likelihood that your clients will notice anything is probably pretty low. But I feel like as the business owner, having, like you said, that data and the person to talk to about the data that you're seeing, or maybe trying to make some decisions about things or forecast things, that actually elevates the way that you feel when you're running your business. First of all, I feel like it makes you feel more legitimate. And second of all, I feel like it just helps you make better decisions, because sometimes there's things you might want to invest in that maybe it's not the right time, or maybe it is the right time, and having somebody else that can actually look at your numbers and make a logical decision and not an emotional, like, I'm too afraid to spend this money kind of decision. I think that can be something that actually then leads to more revenue just because of the way that you're showing up in your business. So I've had that experience for sure. And I bet you've had clients that have had that experience too.
Yeah, definitely. And you touched on something really important, is that we look at things subjectively. It's hard, objectively. As a business owner, it's really hard to look at your numbers objectively. So I was on a call with a client a couple of months ago, and she was talking about, she was just reading into her numbers, like, oh, I did this month, and like was very emotional about it, and not emotional in a bad way, just reading a lot of emotion into things. And I was like, okay, let's take a step back. Like, let's look at the hard data. Let's not talk about the stories that are involved with it. Yes, there's a time and place for that, but there's also something to be said for looking at it objectively. And sometimes as a business owner, you can't do that with your own numbers. So you need that outside person to come in and tell you, okay, this is what I see from someone with a financial background that does not have, yes, we are invested in your business and we want to see your business do well, but it's not the same way that you feel about your own business. And that's a good thing.
Yeah. I don't think anyone's ever going to have the emotional attachment to your business that you will. So, like you said, even if you're invested in it because you want your client to be successful, you're not going to have the emotional response if you see somebody's numbers changing. So, definitely having objective eyes on things. And that's where I feel like coaching is so helpful too. It's just that person that can see your blind spots, see your what's going on without having that emotional attachment or the beliefs or stories that are getting brought up. So I would love to chat a little bit about bookkeeping in general and what are some of the mistakes you see people making. So we talked about why maybe having somebody do your bookkeeping is better than doing it yourself. But I know that a lot of people out there, maybe they have a lot more time than money and they just want to get started with bookkeeping and they don't want to do it the way that I did it, where it's like, wait until December 30th to like try to cram it all in. So, and maybe that's one of the biggest ones you see is waiting until the last possible minute to do it. But I would love to hear what are the mistakes that you're seeing with the people that either you're working with or you haven't worked with yet.
Yeah, definitely. So that is, we'll start with that one, is just either not doing it, completely ignoring it, or waiting till the last minute. To remedy that, I recommend setting aside like one day a month or a half a day a month towards the beginning of the month where you can look at the previous month's finances and just get it done. So at the end of the year, you're ready for taxes and it's not like 3 days of stress, because really, who wants to do that at the end of the year where you're like thinking about Christmas and New Year's and all these things? So that's my recommendation for that. As far as other mistakes I see, mixing business and personal expenses. So I definitely recommend getting a separate business bank account and keeping everything separate, because not only does it make things easier for you, it's better for tax time, and it helps so that you don't miss any income or expenses, which would overstate or understate your taxes. So we don't want to do that. Another one I see is ignoring sales tax. So if you're a business that has sales tax, a lot of it's sales tax. It's interesting. The landscape is changing. A lot of states are starting to tax digital products, which is interesting because you would think sales tax is mostly physical products. So that's a big one I see too, because people don't understand or don't know that sales tax sometimes, even if you are not selling any physical products, is something that you have to think about. Another one I see is Venmo. Please, please, please do not use Venmo for your business. It's not meant for business use. It's meant for personal use. This is crazy to me, but they can actually keep your money if you're using a Venmo personal account for a business and they find out, because it goes against their guidelines. They actually have it stated in their guidelines that they can keep your money. So for your own sake, please don't do that. Even there is now Venmo Business. I just still don't like it. I don't think the reports are good. Stripe or Square or Shopify, any of those are a way better option. Another big one that I see is not keeping your receipts organized for your business. So, going to Target and buying office supplies and just throwing away the receipt. I like to just keep it simple and have it stored on a Google Drive folder. That's what I recommend. You can do it by year and make it super simple. Those are probably the biggest ones I see. Maybe one more would be like not hiring a CPA when it's time to file your taxes. So we can kind of get into kind of the difference between a bookkeeper and an accountant. But basically, you will most likely want to have both for your business. And we work as a team together to kind of holistically manage your finances.
Mm-hmm. Yeah. And I know the difference, but I think it would be helpful for our listeners to know what the difference between a bookkeeper and an accountant is, because I know that our bookkeeping team is very adamant that they want those to be separate. And I think they might be bringing on an accountant as part of their services this next couple of years. But up until recently, it was like, no, we just do the bookkeeping side.
Mm-hmm.
And they really recommended that it generally be a separate service. So explain to me and the listeners what the difference is, because I know when I was first starting my business, I didn't realize that they would be two different things.
Yeah. So a bookkeeper is going to manage your books on a monthly basis. So they're going to get really into the minutia of it, all of the income, all of the expenses, telling you what your profit is, and basically making sure on a monthly basis that everything is organized, that you know exactly what is going on at a transactional level. An accountant, on the other hand, so most people, when they hear accountant, what they think of is someone who prepares taxes. There's like a bunch of different accountants, but that's the one we're talking about here, is someone who prepares taxes. So what they will do at the end of the year is they're the person that is going to file your taxes to the IRS on your behalf. So the way that the two work together is, the bookkeeper on the monthly basis has been tracking everything. Everything's totally clean and organized. They hand that off to the tax preparer at the end of the year. I personally, with all of my clients, I speak with their CPA and I let them know, like, whatever you need from me, just let me know. And because I think it's good that we communicate. I don't want my client to have to be the middleman between the two of us.
Mm-hmm.
So they're going to be the one that's going to do more of the big picture stuff. So they will file your taxes. They can help you understand what you're paying in taxes. They can also help you understand how to minimize taxes, how to make the most advantageous filing for yourself, obviously within reason. But that kind of gets more into a tax advisor role. But a lot of CPAs do that as well.
Mm-hmm. Yeah, I'm trying to think if I guess our CPA did some tax advising. We also have a financial planner, financial expert on our team. I wouldn't say she's technically a CFO, but I know some people do have financial planners that operate as like part-time CFOs in their company. So for us, we have the bookkeeping team that actually referred us to the financial planner, and then the financial planner referred us to the accountant. And then
Mhm.
during tax time, they all communicate with each other because
Mhm.
also we, as far as like legal ways of reducing tax burden, one of those is a retirement account. And so I want to make sure
Mhm.
that depending on how much money we're making and because I didn't even realize this going in, when you make a certain amount of money in your business, you actually disqualify yourself for certain types of retirement. And I didn't know. And so having those people that are like telling you, okay, like this is the number. So that means, do the approach differently and change it to this account. I would have had no idea about any of that. So, it
Mhm.
wasn't necessarily an issue when I was making like, 100K, 150, 200K in my business every year. But now that we're above the 500,000 mark, it's like,
Mhm.
I need some people telling me what to do because I really don't want to mess that up. And the last thing I want is to overpay in taxes and miss out on the opportunity to build wealth in my retirement accounts because I didn't know what I was doing.
Mhm.
So for me, that's been really helpful. And I don't think you have to be making a ton of money for that to be relevant. I just know the more money we were making, the more I was like, I don't want to just be giving all this to the government if I
Mhm.
don't have to, right?
Yeah, totally. Yeah, no, I totally agree. And it's something that you can put in place. Yes, it's more important the more you make, but it's if you put those guidelines into place in the beginning, it's kind of like bookkeeping. All of this financial stuff is like if you start out with it, then as you grow, it's already in place. You don't have to get to, like you said, the 500,000 mark and start scrambling. It's already there. You already know what you're doing. And I think the world of both CPAs and financial planners. I think that like all of us work together and for your business, for someone's business, and it's like it's three pieces of a puzzle, and we all fit together, and you get the best financial, you get taken care of financially the best when you have that whole team.
Mm-hmm. So, just to go back to the basics, what kind of tools do you have your clients use to track their income expenses, that kind of thing? Because I think a lot of people do just plain old spreadsheets and that kind of thing. And
Mhm.
that sounds terrible to
Yeah.
me, but I could also be wrong about that. So, do you have any sort of tools that you
Yeah.
recommend?
Yeah, so a spreadsheet is a good starting place. I don't think if you're making 100K in your business, you probably shouldn't be tracking it on a spreadsheet. But it's a good starting place for someone just starting out. We have our spreadsheet. It's called the Money Mapper. And it's just really simple. You put in all of your income, all of your expenses. You can track your goals on there, your miles. It's a super simple beginner kind of thing. What another step up from that is like an accounting software. So everyone knows QuickBooks. QuickBooks is not actually my preferred software. I use one called Zero, and it's for me, it's comes down to customer service, which like anything in my business, that's I strive for amazing customer service. And I feel like they provide that. QuickBooks, on the other hand, not so much. So I always recommend that. Whether you're going to be working with a bookkeeper or if you're like, no, I'm dead set on DIYing this. The great thing about Zero is that if you do need that help, that customer service will be there. And their plans are cheap. It's like $12 a month, and so what is that, like 144 a year? It's not really that much money in an investment in order to track things in the beginning. So that's what I use for all my clients. But if you're dead set on DIYing, I would definitely recommend going one of those two routes.
Mm-hmm. Yeah. And like you said, I think there's a certain amount of money threshold where just a basic spreadsheet's probably not going to cut it anymore. And
Mhm.
it would probably get a little, and especially depending on what kind of products you're selling. Because if it's like, you're making 100K a year and you sell $10,000 packages, that's a totally
Mhm.
different type of bookkeeping experience than if you sold,
Mhm.
1,100 products that you're trying to track. So I think the
Right.
volume is probably the most important thing, like just the number of transactions that are going in and out. But I will say, doing it manually definitely takes more time than if there's some kind of software that's at least tracking things for you and connected with bank accounts and can at least have the data all, you know, uh, I don't know what the word is, not combined. We're both,
Mhm.
Annie and I are both experiencing mom brain. Our babies are very similar in age. So I'm like, vocabulary is not my strong suit right
Yes.
now, but it's kind of that like just summary of information that all
Yes.
gets presented to you. And
Yes.
you still have to do stuff with it. It's not like it's just this automatic, everything is done for you on the software and nothing, there's no input from anybody else. But I do think having at least some tech involved to keep track of stuff is, in my opinion, as things start to grow, it's just one less thing to think about than having to remember, I got to go look at my bank account statements. Because that's really how I used to do it when I first got started. It was, let me print out like 12 months worth of bank statements and then go through and highlight the ones that are the expenses, and it was awful. So
yeah. And the other piece about that is where you're using a spreadsheet. Sometimes you're not getting the full picture. So let's say you use Stripe as a payment processor and you have $100 payment. You're only going to see that, 93 or whatever dollars it is minus the fee deposited into your bank account. Then you have no idea how much you're actually paying in fees, which could be important. Maybe you're considering changing payment processors because this one has less fees. It'd be really nice to have that full picture and know, oh my gosh, I'm paying, X amount of dollars a month in fees. I could be saving this amount of money.
Well, and that's something that I think a lot of people don't really think about, especially when they are more mentally tracking their money as opposed to actually paper tracking, because you might be like, I just sold $3,000 programs this month, so that means I must have $9,000 that I made. And they don't think about things like processing fees or, different things that are coming out of your bank account to support delivering those products, that kind of thing. So it's really easy to assume you're making more money than you are because you're not actually tracking the exact dollar amounts. And I don't know why people tend to forget about the processing fees for things like Stripe or I think PayPal has processing fees too. So it's like, I don't think there's a way to avoid it unless you get like actual checks in the mail. So, it's one of those things where for me personally, the ease of receiving payment is worth, the percentage that they take, because that might be the difference between an extra sale every month. And that obviously covers a lot of that fee structure. But that's something that I think a lot of people forget to think about. And then they're like, where did all my money go this month? And they're not even paying attention to what's going in and out of the bank account.
Yeah. It's one of the things I see most when people are like, I like using Venmo because I don't have to pay a fee. My response to that is kind of like, if you're worried about a 3% fee, just raise your prices by 3% to cover that fee. You're protected, first of all. It's way easier to use a payment processor like Stripe as opposed to Venmo, where you're chasing people down. You don't know if they've, sometimes it's hard to see if they've paid. You don't know exactly how much is deposited. So that's always my kind of response is like, if you're worried about that 3% fee, people aren't going to bat an eye if you raise your prices by 3%.
Yeah, I think 3% would be what if it's like a $3,000 program, $90 or something.
Yeah.
So
that's right.
Yeah.
Mental math is not.
Well, that sounds like a lot, but over the course of, a period of time, it really isn't that much. And again, if it makes it easier for people to buy from you to use those kind of tools, especially if you're selling using some of the software that exists, like we use either Practice Better or Kajabi for our payments, depending on if it's a one-on-one client versus a program client. And both of those integrate with Stripe or PayPal, maybe Square for some of them. But, and I don't even like PayPal, honestly. We only have PayPal as like an option for our lower ticket single payment stuff because it's such a nightmare to use it. But what I will say is that if you make it really easy for people to buy, that's going to increase sales versus if they have to go through some like sketchy process where they need to get your Venmo information. Like that's just,
it's kind of unprofessional.
It is, honestly. Totally. Yeah.
I'm not like, okay, add me on Venmo. No.
I know, it's like, it's going to sound really bad, but it sounds like you're like dealing drugs or something where it's like, okay, here's my Venmo. And like, I'm not going to track anything with the government or anything. It's like, that kind of goes back to that conversation about customer experience, to say, it's worth investing in things like a payment processor and a host for your platform, which can do booking and invoicing and forms and, deliver content and that kind of thing. And it's, versus I've worked with people who were taught by other business coaches to basically DIY everything, where it's like, again, that idea of do Venmo so you don't have to pay the processing fee, and use Google Calendar so you don't have to like pay for a booking app. And I'm like, oh my gosh, that's literally gonna be very quickly inappropriate for the kind of business you want to grow. And then it's like a hot mess that you're trying to deal with moving into a different platform. So I really feel like anything that can make tracking your money and managing it and also receiving it as easy as possible, something worth doing for your business, even if technically there's a little bit of money lost, quote unquote, if you do it that way.
Yeah. And if you think about it in a sense of like, that might work when you have 2 clients or something like that, but we all want to grow our business. We all want to scale our business. That's not going to work when you have 100 clients or more,
Yeah.
So it goes back to setting up our systems in the beginning so that as we grow, things are easy and run really smoothly.
Well, and I find for a lot of tools, these things grow with you as you grow. So it's not like you go in and you're paying the exact same amount that somebody who's got like 500 clients is paying, right? So there's a way to get started at a lower level and pay for the things that need to be paid. And something like Stripe, you're only getting money taken out when you make money. So you're not paying any sort of subscription fee or anything. So it is something where, I feel like not having that like tight grip on money is really helpful. But actually, then the flip side of that is something we can talk about, which is that idea of looking at profit versus sales. Because even though I don't want my clients to be really neurotic about, every little dollar that goes out of their account because they're not thinking about the long-term game, I also think you can go in the other direction when you're like just focused on revenue or kind of that marketer math of, I have a 6-figure business, I have a 7-figure business, but what people don't know is that you have like a 10% profit margin or something. So can you tell us a little bit about what is the difference between sales and profit, and maybe some of the mistakes that people should avoid when managing those two things?
Yeah, this is one of my favorite things to talk about. So on the one hand, you have sales. So that's the revenue that your business brings in. So let's say you sell a course for $500 each, and in a month you sell 10 of them. So your revenue for that month, your sales for that month is $5,000. And then your profits are what you have left after all of the expenses. So let's say you have that $5,000 in sales, and then your expenses for the month for $2,000. So that's going to be anything from subscription fees. That's going to be office supplies, any expense you have in your business. So you have those $5,000 in sales, and then you have that $2,000 in expenses. And so what you have left is a profit of $3,000. So if you're only looking at those sales, that 5,000, you're really only looking at half of the equation. So this is kind of where I have a little bit of qualm with the internet, where I hear people say, I had a 20K month or I had a 10K month. My first question I want to ask them is, okay, was that profit or was that sales? Because that's very different. And I find that a lot of times in the online space, that's sales. Like, people are just talking about how much sales they had. They're not even taking into account expenses. I just think it's become such a buzzword to say I had a 10K month. And it's like, that's great. I will celebrate with you every single time. Like, I am super excited for my clients when that happens, but I don't want you to only be looking at half of the equation. So I want to draw out kind of a scenario for someone. So let's say business A over here has 50,000 in sales. So they can say, oh my gosh, I had a 50K month this month. That's amazing, right? So let's say that their expenses though are $45,000. So they're only left with $5,000 in profit. Business B, on the other hand, over here only had 15K in sales. Still really awesome, but not 50K. But their expenses were only 5,000. So they're left over with $10,000 in profit. So business A, even though they had 50K in sales, they only had 5,000 in profit. Whereas business B only had 15,000 in sales, but they still have more profit. So it's kind of like, which one do you want to be? Well, that's up to you as a business owner, like how you want to operate your business. But that's why for me, it's really important not only to look at profit sales. I really like to look at profit percentages as well. I think that that's really, really fun. It's like kind of nerdy. But, I think it's really helpful. And I don't really subscribe to like, you're in this industry, you should have this profit percentage. I'm more so of the mindset of comparing it to yourself a year ago or 2 months ago. But I think that that can be a really, really helpful tool for business owners.
Yeah. And for us, I pay myself a salary, like I'm an actual full-time employee of my business. And I believe we don't count that as part of the profit. I'm pretty sure because basically anyone who's getting paid out of the business, that's an expense. So profit is really just anything left over. Whereas I feel like when I was just getting started, I considered, and actually the way that we did the taxes, I'm pretty sure anything that was left over was the money I got to keep myself. So I do think there's different phases of business where, you know, when you're first getting started and you're a solopreneur and you don't have any team members and you're not doing like an S corp tax structure or anything like that, you might say, oh, I have an 80% profit margin, 70% profit margin. That's awesome. And as you grow and maybe you start to have a business like what mine is like, where you are paying yourself as an employee, we might go down to like a 20-30% profit margin with our business, but that's money that is above and beyond what I'm paying myself. And so I like doing it that way because I don't know if this is totally the profit first mentality. I haven't read the book, but my financial planner helped us set up some bank setup so that we can move the money that's coming into the business into operating expenses, profit, and tax reserve. And so my salary comes out of the operating expenses. Obviously, we have our tax reserve that we're saving for whatever we owe with our taxes for that year. And then the profit, I think we do 10%. I'd have to ask my husband because he actually does all the money moving for this, but that's supposed to be extra, right? And so I like doing it that way because I think sometimes other people that consider their salary to be profit, it's like, but if you're, you know, you have your own needs and maybe you don't have the kind of business I have where I'm the sole breadwinner in the family and we have to make a certain amount of money. But it's like, if I was like, oh, we made such a great profit this month. And then I realized like, oh, we didn't even meet my normal budgetary needs for my life, then is that really profit? Is that like something I should be excited about if we didn't even get enough to pay my bills? So I personally like to not include my salary as part of the profit equation, but that's just me. I don't know if you have an opinion about that, or if that's something you advise your clients on.
Yeah, I think it depends where you're at in your business journey. So like for someone like you who is established, who has made really good profit, that makes the most sense for yourself to know that you're getting a certain amount each month. And also from a tax standpoint, being that S corp. So I advise my clients usually, obviously taxes are not my area of expertise, but I know a little bit, I know enough. And so I typically recommend if you're going to make more than like 50 to 75 in profit to make that S corp election. But that is something that to work with a CPA on. If you're at that point, you should definitely have a bookkeeper and you should definitely be working with a CPA because there are some rules from the IRS as far as like how much you have to pay yourself and that kind of thing. You can't just say, you can't say, oh, I'm going to pay myself $1 and then I'm not, and like save a bunch of money in taxes. Doesn't really work that way. So that's why I always recommend if you're going to make the S corp election, definitely work with a CPA. But yeah, I would say someone who is at that point in their business, that's definitely the direction I would recommend. But someone who is just starting out and maybe the one advantage I would say to like owner's draws where it doesn't, you're not paying yourself a salary is if you have really inconsistent income coming into your business, then you can kind of fluctuate what you're paying yourself. So I usually I recommend to my clients doing their draw at the end of the month as a percentage of their profits. So let's say maybe you decide, okay, each month I'm going to take 50% of my profits and that's what I'm going to pay myself. That helps you keep enough in your business bank account. Because let's say you're like, I just want to pay myself $5,000 a month. Well, if you only profit $3,000, it's not really going to work. So that's why I really like to focus on percentages as far as that. But yeah, once you hit that threshold, definitely the salary is going to be the way to go.
Mm-hmm. Yeah, I think it would stress me out a little bit if it was like, just depending on how much I made this month is what I'm going to pay myself. And like you said, people are in different places in their business. If my husband had a full-time job and was making enough to pay our basic bills, then, the business might be more of like a side hustle or something that's like, oh, it's extra money for us versus our business being literally our entire family's financial resource, right? I just like having that consistency because then it flows into personal budgeting and personal finances where it's like, we can kind of say, okay, this is what we have to spend in our personal life. And we can make decisions about, are we going to buy a new car? Are we going to go on a vacation? Are we going to do these things that are personal finance related? And we don't have to go look at like, well, how much money do we have? And it's that, ability to forecast about what's likely going to come. And I always try to, again, have cushion in the business as far as I never take a salary that's like exorbitant to the point where we're risking running out of money. And we're looking at it every month. So that's the other thing is like, even with a bookkeeper, we're still looking at the numbers that they're sharing and we're looking at what's in the bank account. So if anything ever started to get a little sketchy, it's like, let's do another promotion or, it's like, let's get a little bit more money in there. Let's do a couple one-on-one clients. Like it just gives me the ability to make the decision in the business for, am I going to do a little bit more promotion? Am I going to rest a little bit? Like that can be helpful for me to just know, do I need to do anything unusual or can we just kind of operate the way that we were planning on operating? Because obviously you can't control how much money you bring in. You can guesstimate, you can say, I think this is what we're going to do. You can look at your payment plans that you have that are going across the year, but you can't be like, we're going to do this amount of money on the next launch. And that's what, is going to define the amount of money I'm paying myself for the rest of the year. It's like, you still have a little bit of uncertainty in your business to account for. So I always try to be a little bit more, moderate with how much I pay myself to make sure that we're not running out. Because we do have team members that I'm paying, and it would be pretty stressful if I was like, I can't pay my team this month, which I know sadly is relatively common in the online business space when people start hiring.
Yeah. Yeah, it is. It's definitely something that I've seen, and it's not something that is a fun situation for everyone. That's why I always recommend something I recommend for my clients is always having a reserve set up. So you have your main checking account. You have your tax savings account that you set aside money for taxes every month. And then having a separate savings account that's your reserve, your rainy day fund. It's kind of like, if everything goes wrong in a month, I have this money set aside for just in case.
Yeah. Which I feel like our tax reserve fund kind of operates like that because in theory, if our profits drop, then our taxes are going to drop too. So, because if we're paying myself and other people on the team a salary that also has taxes accounted into it, it's like, in theory, if we had $0 left over at the end of the year, we wouldn't have any additional tax to pay. So not that that's not my goal. Obviously, I don't want to be drawing from the tax account, but that is something where we have that reserve. So it's either going to be used to pay taxes or it's going to be used if there's an emergency, because we do have an emergency fund, but it's like also the tax reserve is assuming we're going to have profit. And that's another mistake I know I used to make. Well, I'm trying to think how many times I've made this mistake. It's probably been a couple of times in the earlier part of my business where I wasn't paying attention to that tax reserve thing. And then at the end of the year, it was like, you owe $15,000 in taxes. And I was like, oh, that sucks. Like that just wiped out my business bank account. And so I think, is that something that as a bookkeeper that you do with them, is make sure that they're appropriately saving for taxes?
Yeah, exactly. So I send every month when I send my clients their email with their reports and everything. Each one's a little different depending on what they need. But one of the things that I send is, okay, this is your profits. This is how much you need to set aside for taxes for this month. I typically do 25 to 30% of profits and have them set it aside in a separate savings account. And then on a quarterly basis, I let them know, contact your tax preparer to file estimated taxes. And they usually, some businesses don't. Sometimes, depending on the structure of the business, the CPA won't have them filing estimated quarterlies, but typically they file that each quarter so that at the end of the year, that doesn't happen where they're like, oh, shoot, I have to pay all this money in taxes. I don't even know where that's going to come from. So it makes it easy to do it throughout the year.
Yeah. I'm just thinking through what all the stressful experiences were when I first started my business, and having no clue what I was going to owe in taxes at the end of the year was definitely one of them, which I think is another result of waiting until December, 30th to do all your bookkeeping. So hopefully you guys can avoid those mistakes, because it's not fun, and it's easy to skip this stuff during the year because it doesn't seem important, or it's like, well, this isn't what's making me money, so I'm just going to focus my energy on the stuff that matters, like, serving clients or creating content or sales or whatever. And yes, that stuff is all important. But I feel like this is the stuff that people forget is necessary for a business to function and to not be super stressful, and to not be going into decision-making blind because you don't know how much money you have, you don't know what's going on, that kind of thing. And so, that's why I feel like if you're making even, $30,000 for the year, you should maybe consider hiring a bookkeeper, just because being able to have somebody else helping you manage that is so valuable for being able to put yourself back into that CEO visionary role where you are doing the things that are helping the business make more money, and not worrying about, oh my gosh, I don't even know what I'm going to owe in taxes. And you're just like literally turning a blind eye to it. So
never a good idea.
Yes. Well, and again, this is me speaking from experience. Luckily we figured it out, but it was not a fun couple of weeks at the end of the year. And I feel like it would have been better to spend that time mentally planning for the next year, and not trying to figure out what the financial situation from the year prior was. So, well, Annie, this has been so fun to chat with you about this. I know sometimes money and numbers can be a little scary for people, but if you are a business owner, this is part of what you signed up for. So hopefully the conversation today didn't scare you too much and gave you some ideas and resources for doing it the right way. I know, Annie, that you have a couple of resources on your own website, both free and paid. So if you want to share that with our audience, that way they can take the next step to getting help with this, or getting a little bit of insight into the better way to do this than maybe what they're doing right now.
Yeah, definitely. So I have a free bookkeeping basics guide on my website. It includes tips and tricks if you're just getting started. It includes those common bookkeeping mistakes that we talked about, and a couple more, and then how to avoid them, how to organize your receipts, that kind of thing. Our recommendations for payment processors is all included in that. So you can find that on our website. And then we also have a DIY spreadsheet. So if you're just starting out, I know we talked a little bit about when a spreadsheet is good to use and when it's good to use an accounting software, but we do have our own super simple spreadsheet if that's something that you're looking for, if you're just starting out in your business. And I do have a code for that. So you can use the code podcast20, and that will get you 20% off of that, called the Money Mapper. And yeah, so that's pretty much it.
Awesome. Well, thank you so much for coming on the show, Annie. I really appreciate it. And like I said, Annie and I are literally, I think, like weeks apart with our babies. So I think we both empathize with the other person's just mental state as far as showing up and doing this kind of stuff. So for that, I doubly appreciate you coming on and doing it, because I very much appreciate how challenging it can be to not only find the time, but also the mental energy to share. So thank you for taking this on today.
Yeah, thanks for having me. It's been really fun.
Awesome. Well, thanks to all of you for hanging out with us for the last hour, and we'll look forward to seeing you here next week on the Fed and Fearless podcast. Take care, everybody. Are you a nutritionist or dietitian struggling to figure out how much to charge for your programs and services? Maybe you've heard that as a nutritionist, you should just charge what you're worth. But this way of thinking can cause you to either undercharge your clients or work yourself into the ground trying to earn your worth. As a healthcare provider, you can't set up a pricing structure that forces you to sacrifice your own health and well-being in the name of your business and your clients. But I promise it doesn't have to be this way. When you download my free profit planning workbook, I'll walk you step by step through the 10-step process for determining the right pricing for your nutrition business. As a nutritionist, you have the power to completely change someone's life for the better. There's huge value in that, so it's time to stop underselling what you do. By following along with this worksheet, you can determine exactly what you need to charge to achieve your revenue goals with ease. I'll teach you everything I've learned about pricing from growing my own nutrition business to over $250,000 in revenue annually and helping other dietitian and nutrition entrepreneurs hit their first $10,000 to $30,000 months and beyond. To get your free workbook, go to lauraschoenfeld.com/profit, PROFIT, and grab your copy today, so you no longer have to wonder how to set the right rates for your incredibly valuable nutrition services. That's lauraschoenfeld.com/profit. It's time to make the money that you deserve as a nutritionist, and I can't wait to help you get there.